So, hello, and a massive hello to everybody. No trade calls, no recommendations, response for their own stuff. We're here for educational purpose only. So, as usual, I've committed to doing this once a month, and let's see what's going on. It looks like we've only got 3 people watching, so not a huge turnout today, and we'll see how it goes. But as I said, I'll do it if somebody shows up. I'll do it. And again, any questions, welcome. Probably since there's not that many people out and people tend to be shy about the questions, I'll just go through a little bit of a market review, look at what I'm seeing and what's going on. And let's see what happens if somebody else shows up. If we don't get anybody showing up or no questions, probably from now on, I'll probably just post a recording, or I'll scrap these if we don't get any questions or nobody showing up. There's not much point doing them. So here, where we are, basically, we've been discussing the action into FOMC, like for those who've been following on Twitter and have been following on the blog too. And basically, the base case assumption was to see a press higher into FOMC, right? Kind of buy the rumor, sell the news, and see us with that FOMC grind higher, pop, and then to fade the move, right? We know people who follow these over the years, we know that usually the best time to fade the FOMC move is 24 to 48 hours after the event. And so far, so good the way it's played out, right? So if you look at here on the SPY, right? So basically we've had this ramp up all the way into the Friday. So that's 48 hours after the event. Friday high is holding, and we got that initial retracement back into the 10-day moving average. Hey Jason, how's it going? I'll look at euro in a second. So here, the base case assumption off those highs, what we were talking about was that we're going to get a 3 to 5% correction. So the 3 to 5% correction here takes us back down into these previous all-time highs here. And that would still be orderly, right? So here what you'd see is you've got these previous all-time highs coming in, previous resistance acting as support. You've got the 50-day, the 100-day coming in. And so you'd expect this to be a very, very big support zone. Now, this would be the orderly move for then, pullback, and then we rally up into the end of the year. If for some reason these previous highs, so we talked about it on Twitter, so the 4,500, if that doesn't hold, then we'd expect a bigger pullback all the way back into the 200 DMA. Okay, so that's the way we'd be looking at it, and so far it's playing out quite interestingly. And what I said yesterday, look at the 10-day moving average. That's the battle line, right? And you can see here, you could see yesterday, if you look at, this is basically FANG. And yesterday, where did the stick save come? Right at the 10-day moving average. ES, where did the stick save come? At the 10-day moving average. Nasdaq, where did the stick save try and come? At the 10-day, it couldn't hold. Nasdaq is being the weakest, right? So here also today, very technical. Back into it, it's being sold, and that still points to that correction back into those all-time highs and the confluence of those moving averages coming up there. YM, where did it stall yesterday? Stick save at the 10-day. And Russell, what happened? Stick save at the 10-day. So, the market is very technical, and it's behaving exactly the way you would expect it to behave. So far, so good. And here we'll have to see how this trades today around that 10-day. But still, the bottom line is the assumption is still that we're going to get that 3 to 5% pullback, and then things will likely get interesting. Okay. Now, what's happening on the euro? So as you'd expect, yesterday also on the CPI print, right, which should have been a surprise to absolutely nobody that's been paying attention or paying any bills lately, right? Basically, so we see a little bit of panic. Bonds get smashed. Dollar gets bought. Gold gets bought. So, fairly classical reactions here. So we'll have to see what happens. We're already long gold actually from the FOMC, so that's a nice trade. And gold is basically in a very bullish seasonal period, so we'd be looking to hold the swings all the way through next year. We're trying to average in. We had 3 specific buy points into that FOMC on the puke. We only got filled on a third of the position. So still riding that, seeing if that can play out. Now, what does that mean for Euro and what's happening here? Well, Jason, Euro's been, I don't know if you've been following these YouTube videos, but basically Euro's been stuck inside this 117 and 115 range. And what we talked about was, unless something substantial happens, we don't expect it to really break out of this range. And this is really important, right? Now that we've broken below, this potentially stays extremely heavy. Does that make sense? So here, what you want to look at is, in the same way as some of those other charts, is that if the market, and you could look at this as the 10-day kind of, the market needs to stick save this 115, okay? The longs need to stick save this. As long as we can get back above, then, you could see either a tactical bounce back into the descending trend line, and if the 117 caps, then the bears are still in control. If we take out the 117, then you would expect something substantial to have happened into this possibly rally back into the 120, 119 range. But right now, that's really out of the question, or that's not in the cards. So here, what you want to watch today is any hold below or any rally back into this 115 or even into the 10-day moving average, that gets sold and gets it back below this very quickly. This really opens up the room all the way back down into this, 112 broader area. There's just not that much here. So this is a really, really important point, and you can see this materialize on a lot of the other currencies. So I don't see it as how low do I think the euro could drop? That's just not the way I look at the market. I look at levels and scenarios around those levels. So here, my base case is, as long as we hold below the 115, the risk is for a grind back down into the 112 area. And if it can recover this, then the potential is for a pop back into 116, 117, where the bears need to come in to cap this. Very uninteresting as long as it stays inside the blue shaded area. But here, the risk is that a lot of people get caught off guard on the dollar, and the dollar strengthens more than people expect. And by the way, cable's already trying to complete its move. We've been talking about this for a long time. Cable is in this big retracement back down, sold at the 50 back, and we've got basically targets of the 132 as a primary target on cable and an extension target at the 130, 129. Of course, we'll have to see what happens with rates with the BOE, but that's the move that's trying to play out. And this is also a very important point or important level. You can look at this low as the equivalent of the 115 mark for euro, right? The market already tried to bounce hard off this level, and you see how the bounce got sold again at the 10-day. So here, essentially, this is the market keeping the pressure on. So look at this, Jason, exactly the same way as the 115 on euro. Any bounce that can't get back above the 0 or back above the 10-day, that still opens the bigger drops. Now, if it can stabilize, then corrective bounce on euro, corrective bounce on cable. If not, it could just be a grind lower, right? And that's basically, you see that on the DXY chart. And we talked about this basically, how we were expecting that pullback into more of a neutral area into the FOMC and then potential move higher. And basically this is broken out of the range, right, of this higher level, which is the 9460s, call it 9450s. And you can see this in the 115 on euro. You could see it as the 10-day moving average kind of on stocks. Basically, if this can't get back below, then the path of least resistance is for this to continue to grind. And because most people are positioned on the wrong side of this trade here on these breakout, these could really have legs and really move very, very quickly. So these kind of breakouts are breakouts where it doesn't mean you can't fade if they stall, but you don't want to fade strength, right? You don't want to fade a rip higher, slow grind higher, or rip higher. You don't want to fade a drift. You want to wait for levels, or you want to wait for weakness. Clearly, if this gets back below this range high, which is this broader range we'd been discussing here, which is 89 to the downside and this 94.50 to the upside, then much to do about nothing, right? This could, it's like the inverse of the euro, right? But we're at very, very key levels, and we're at key levels where you really don't want to get stubborn. Okay? Any comments, any questions? I mean, I think what could be interesting for people that watch the recordings. I mean, I think the other thing you want to watch here also, I think is interesting, is how Bitcoin trades, because, as long as Bitcoin doesn't catch a bid, then I think that gold move has more legs and it's going to have an easier time running. But just be careful, just because we're in seasonal, and again, full disclosure, we're long gold, but if we're in seasonal long for gold, it doesn't mean that you have to, queue up to buy, to pay nosebleed prices, right? Just don't get too excited. Wait for a specific setup and wait for the market to come to you. That's what I would be looking at, instead of blindly trying to chase moves. Now, here today, I think the bonds are really not that interesting. Most people are going to be looking at being long the long end against short the short end. We'll have to see how we settle tomorrow. Hey man, how's it going? But again, here's just a question really of, do we get follow through on this dollar, and do we get follow through on this correction on the indices, right? And there's been a lot of damage across the board. If you look like at Beyond Meat, if you look at PayPal, if you look at Peloton, you look at a lot of the single components, there's some really ugly air pockets that have been hit across the board. It's kind of masked if you just look at the indices, but we're still looking for this bigger correction. The ES is getting legs. Here, let's look at this. Actually, this is from the daily. I'll bring it up since you're here. Let's see if I can get. So this is what we were looking at today into the open on the ES, right? So basically, this is much easier to see, right? We ramped up. So basically, here we're Thursday, Wednesday, Tuesday, Monday, Friday. And this is something we discussed on Twitter too. And we said, don't underestimate the importance of Friday range, right? Our base case is ramp into FOMC, and then we wait to 24 to 48 hours after we look for an opportunity to fade, right? There wasn't any clear opportunity. You had a nice little reversal pattern here, and then we started to fade. And at that point, we said, I discussed this on Twitter too, you want to watch that Friday range. As long as the Friday range hold, there's much to do about nothing, right? But once that Friday range, if that Friday range breaks, and if indeed the post FOMC top we were looking for holds, it's going to hit an air pocket to the downside, right? And what is the natural place to see this try and come back into? Well, the natural place is for it to come back into the FOMC range, right? So you see how we come back down, very technical how we trade through, and we're right back into that FOMC range now. And today, that's exactly where it's getting sold at the FOMC day high. And as long as the sellers continue to materialize here, protecting below the Friday range and protecting the FOMC range high, then you've got potential for this move to have legs. Does it have to play out? No, but it's got potential to have legs. So what we liked here, we were looking for a jump up through these overnight highs into the open and failure to sell. And, that trade's worked out, so, back up, sell, stop above the highs, 50% of the position off at TP1, another 25% looking for a move back to yesterday's lows, and 25 open for a bigger correction, right? Possibly back into that 4,500. So that trade is in play. Now, is it going to get traction? We'll have to see, right? It's just very messy. The market's fairly dead. We've had, about 400,000 E-minis traded. We'll have to see. What we've seen is that, Tesla got sold. It tried to ramp earlier. You're seeing some selling coming back in on Tesla. But everything is fairly dead, right? You can see here, Euro's not moving, cable's not moving, yen's not moving. It's just a little bit of a snooze fest. Crude is trying to get back above this big pivotal level bull bear line, but everything else is a little bit on a snooze. Just the equities are trying to get a little bit more downside traction. So what you want to keep a very close eye on, right, is you can use that kind of, actually, let me do this. You can use that Fangman as a control chart, or you can look at Tesla as a control chart. As long as those big components keep on getting bought, it's unlikely that the market is going to completely fall out of bed. But, see here, Tesla tried to rally, got sold again, but, Fang, pretty much nothing, nothing really crazy is happening, because you've got Facebook up 0.75%, Amazon 2%, Apple green, Netflix up almost 2%, Google up 0.5%, Microsoft up 0.6%. So as long as those large components don't start getting sold, it's going to be tricky. Here you got the Dow still taking it on the chin, even though, you've got the banks green. I mean, a little bit of a messy action. Uranium is still good, so we're not going to complain. Yeah, just not that much going on, right? Just not that much going on. A bit of a slow day. We have to be patient. Any other comments? Any other trade you're looking at? A lot of people, some people like to look at DAX. DAX is just like a dog. It's really not doing anything, stuck at these highs. Not a lot to do. It's just completely dead. Maybe if everything starts to correct and you see it lose these highs, lose the 10-day, that could open up a little bit of a nicer correction. But really, just kind of like a little bit of a snooze fest here. Yeah, yen is just stuck, right? So here it looks like there's every time, it's having trouble finding new sellers at lows, but equally it's having trouble finding buyers. And here, I think as long as it's a slow day on, the bonds haven't really moved and it's a slow day in the market, this is likely going to be stuck inside this range. So it's just one of those days. We need some traction. If not, there's very little reason for this stuff to really try and move. Euro Canada. I don't really trade these. I don't know if you have a specific question on this, but to me, I don't trade any of the crosses. I don't even look at the crosses unless somebody asks me. What's happening here? Let's look at this on a weekly. Yeah, if anything, you'd probably be looking for a little bit of a bounce here. Not something I'd be trading, but it's hard for me. It would be hard for me to get short here. If anything, it looks like it's trying to bounce into higher levels. Clearly, a breakdown would be ugly. It's the same as the Euro chart, really, right? Yeah, look at this as the 115. Does that make sense, Jason? So, we lose this, we could puke, look kind of like towards that 112 on Euro. If not, you could bounce, but you're going to have to deal with a descending trend line, right? Not exactly the same as Euro, but it's going to trade the same. But clearly, if anything, you'd probably be looking for some tactical longs rather than shorts. But if you look at it on the daily, it's messy. It's not really, I mean, it would be nicer if it had made more lows, because these kind of megaphone patterns at lows tend to be bullish, so they tend to break higher. It's not really a pure megaphone pattern. But the problem I see on this is that on any rally, you've got a lot of previous supports that actually likely act as resistance. So it doesn't seem, it's messy. So I think if you'd want to get, look at this. So short is a tricky one. Long is a little bit tricky. But I think if you wanted to do here, again, I'd rather express my opinion on euro, and that means long above 115 or stay short here, whatever you want to do to euro. But I think it makes more sense to try and express that through euro than through something like that. And you'll get a similar thing on the crosses, but I always prefer, better liquidity, less slippage, better, just always prefer to express my views on the majors rather than the crosses. Let me think. Is there anything else anybody wants to look at? No, I'll just see if I can see anything. Probably have to record some more. Just going to scrap these if nobody's showing up. But what else have we got here? Cable, Aussie, Kiwi, CAD. Yeah, it's not a particularly interesting day. Similar action across the board here on something like Aussie, where it's a little bit tricky in the sense that it's still trying to hold this upside rotation, but clearly with this bid in the dollar, it's having trouble. So it's not cheap enough to get short. It's not cheap enough to get long, and it's not expensive enough to get short. We were short at the 200 for a move back here and then flatten up, so no position here, and we'll have to see. But there might be something interesting coming up here. Clearly, if it loses this ascending trend line, you'd expect high odds that it tries to flush all the way back into the 70 mark. But not that interesting here, and it's a similar situation on Kiwi, really, right? Hey, the walking trade, how's it going, man? Good stuff. Hey, Sham, how's it going? Good to see you. Long time. Yeah, I mean, here what I think is I think what's interesting here is equities, right? Are we going to get, as I discussed at the beginning of the session, if you didn't see the beginning, watch the first things we looked at. Basically, the action, the price action on indices has been fairly pure in terms of the rally into the FOMC and then the fade post the FOMC. So the bigger question here is, do we get that moderate correction back into these previous all-time highs and the call it pretty much 4,500 on the ES level, right? Or does this correct a lot more? I think here the problem is we're likely going to get a lot of headlines hitting and possibly a lot of messy action, job owning from the Fed. Who knows? Are they going to confirm Powell? Are we going to get Brainard? Whatever. But it would be, anything can happen, but you would not expect, after what we saw yesterday, the market to just get ramped up very, very aggressively. Now, today we could see a little bit of snooze also because, bond markets are closed. And we'll have to see there. But clearly, this is the most interesting trade, in my opinion, trying to play out. Now, what to watch to get a feel for, general risk on, risk off sentiment, the dollar is, you got to watch bonds, right? Especially once the bond market opens again, you want to see what happens. Are we going to get a situation where things are clear, where you get, the short end getting sold and the long end getting bid, or are we still not done? Are we going to get a situation where everything gets sold, right? And that's the key thing to watch. So really the focus is what's happening with CPI, what's happening with yield, right? So the inflationistas are going to say, see, anybody who is paying attention, you got the 6 print. This is only going to get worse. It's not going away. We're going to see a print into the 7s, into the 8s, et cetera, et cetera. And the transitory camp are going to say, here you go, you got your high print. Now it's going to start to come back down again. So we'll have to see. We'll have to see what happens, how the Fed reacts. Right now, probably the Fed is just praying to God that even though they can hold on, and even if it overshoots a little bit more, then it starts coming down next year. But again, we'll just have to we'll have to wait and see. But clearly, what's likely going to drive the overall tone is how the bonds trade, right? How the bonds trade. And you'll see that materialize very quickly. You know, whether we discussed these earlier, you know, look at it, you're going to see it very easily also on DXY, right? Is the DXY going to continue to hold this broader range we've been in, which is 94.50, 89, or does it continue to rip higher, right? And that means that euro continues to puke below the 115 all the way into the 112. And that's the dynamic to watch here. Clearly, on any given day, the other thing, if you see, if you're looking for the correction on equities, if you don't see some of those big components under pressure, then it's going to be tricky for the market to really correct. Also, if you continue to see those opens where you just see those rotations right in and out of YM, Russell, and Nasdaq, then it's much to do about nothing. You know, a lot of people will use those rotations to try to confirm their bias, especially the bears. Every time they see one indice down, they go, see, it's dying. But, you know, we've talked about this a lot. Those rotations are bullish, right? They're bullish the market, so they're supportive. So you want to see, you know, and maybe we see more selling in Tesla, and that kind of knocks people's confidence. But you need to watch those big names. You know, that's going to give you a good feel for how things are working too. Yeah, gold, we're long gold for seasonal play. We got long into FOMC. On the puke, we were looking to possibly get filled on 3 entries. We only got filled on 1. So holding a partial position. And right now, you know, especially if we hold this key pivotal level around the 118.30s, as long as it holds this, well, then it looks like the rotation is going to try and take it all the way back into 119 and possibly higher. But this is the move right here. It's, you know, you could see a big air pocket, and especially if you're bullish, what you do not want to see this trade back below this breakup zone, right? You do not want to see it trade back below the 1829, 1830. You know, you want to see buyers coming in supporting any dip. And as long as that holds, then this is likely the path of least resistance. If you get another smackdown, I don't know, something Fed says does, something happens, we trade back below here, then you could easily see this flush back into neutral, which is the 118. But right now, if you see the data that's coming out, the narrative, the price action, the seasonals, everything is bullish gold right through the end of the year. That's what we'd be looking at. And, you know, and that's very similar also if you're looking at silver, right? Very, very similar kind of action. Resistance, 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 sold hard. Then once we broke through that previous resistance, acted as support, and we rally off that, right? And that 1830, 1829 level on gold, it's kind of like this area here on silver. And as long as we're breaking above this zone, then it's got room to run. Now here, I wouldn't pay too much attention to the 200 simply because it's flat. But here, the risk is clearly as long as we don't trade back below this breakout zone, The risk is that we move back into the 27 mark. That's what I would be looking at. Clearly, this could it's a big break here. So it's getting interesting. I mean, we said Q4 was going to be very, very interesting. A lot of things to look at, and again, as always, you just want to be patient. Let the market come to you. Try and structure your trades properly, not run after the trades. Going into the following weeks, you want to see, what do we get on the headlines, especially with regard to from the White House regarding to inflation, with White House regarding Powell reappointment or Brainard, whatever. But if you don't want to focus on that too much, just keep it simple and look at the levels, right? And you got significant lows between yesterday and today on the bonds that need to hold. If not, things could really get funky. And right now on the equities, it's all about that 10-day moving average on a lot of stuff. And on FX, it's about this DXY breakout. So just forget the narrative, forget the bias, and try and focus on the levels, right? And how price is reacting at the levels. Long on YM, I'm personally not really that interested in getting long anything here. If you're talking about end of the year, but clearly this is a key zone, right? Because this is that ramp range we looked at on YM in the sessions, right? So clearly here, especially if on the 1 hour we get a positive close here, if they ramp this back up through this level in the next 8 minutes or so, well, there's a good chance that at least for the morning session, the low is in, and it's going to try and rally back in and take out these overnight highs here. So clearly that's a possibility. If any case, if you're short a YM here, the last thing you want to see is this close positive, because you'll probably see a lot of late shorts today with poor location that shorted this break that now are stuck. So if we trade back above here, especially with a positive close, you'll see a lot of tactical longs coming in and a lot of late shorts needing to cover those positions. So you could easily see that pop all the way back into the overnight highs. If we close below, then this opens up that bigger correction. But right here, there's a decent fight going on YM. It's just like a little, I mean, it's a dead day. We got 460,000 E-minis traded. I mean, bonds are doing nothing. It's just one of those days. It's hard to read too much into it. I mean, look at this euro, essentially from highs to lows. This is we've been in a 25 under a 30 pip range for the past 20 hours or so, right? So yeah, it is what it is. Okay. You just have to be patient. Let the market come to you, see what happens, and just, play by ear based on what the market does. Okay, guys. Good stuff. So thanks a lot for hanging around with me. Recording will be up as soon as YouTube processes it. If you don't want to wait for the YouTube, I'll email it tomorrow out to anybody who's subscribed on the blog. Thank you so much for showing up. Thank you so much for the questions, guys. It was good to see a couple of people I hadn't seen around for ages. Wishing everybody an awesome rest of the day. And since we're almost there, an even better weekend ahead. Okay? All the best, guys. Take care. Thank you so much for stopping by. Bye-bye.